Welcome back to another episode of Token Narratives. I'm Graham Stone, joined as usual by David Sensel. And this week, we are excited to have Aaron Day join the pod, and he is the CEO of the Daylight Freedom Foundation. We're going to be asking Aaron, getting his thoughts on his very interesting analysis into the technocracy as it relates to things like the Clarity Act, the erosion of digital privacy, especially in the financial realm. So excited to hear your thoughts on that, Aaron. Thanks for joining the podcast. Yeah, but before we get into that, we need to address the elephant in the room, which is that Bitcoin has had another historic crash. Currently bouncing a little bit, but dropping as it dropped as low as almost $60,000 a coin, I believe. One of the biggest drawdowns, single day drawdowns in Bitcoin's history. David, what other stats do we have here on this historic pain that we're experiencing right now?
Yeah. So, I mean, we haven't been this low since mid October 2024. It's been a while. Um, and we can go through a bunch of different numbers and stuff. But just to start off with, Bitcoin was able to win back the volatility crown from gold, which it had relinquished for some time, making like 100% move in implied volatility from below 40 to as high as 90. It's come down a little off since that, while gold fell from like 48 down to 30 something. So Bitcoin again, well, once more again, more volatile than gold. And I would say, just as an aside, this has been kind of down only since 1010, right? It went sideways for I don't know about a month, but this recent leg down is probably led by the U.S. equity markets that started selling off on Wednesday and into yesterday, and so this is, I don't think, precipitated by something within the Bitcoin market. Um, a lot of people on the timeline saying that this has been like a very orderly selling. I don't. I'm not a trader, and I don't read the kind of the voodoo signs of that. So I'm just taking them at their word because a lot of the traders are saying that. Um, Probably gonna be in the next week or so, 2 weeks, 3 weeks, some info on deleveraging or margin calls or something blowing up, um, to cause this happening like that, like it has. Uh, so yeah, you have equities going down. You also had gold and silver, precious metals go down right since the past week. Silver especially got battered. I think they lost it. Silver lost 9% on Thursday, um, compared to Bitcoin. Bitcoin lost 12%. So I mean, that's pretty wild. Gold fell about 1.2%, on Thursday. So you just have broad sell off happening, not just in crypto, but across everything. Silver is off 40% since last Thursday, which is a wild number. Um,
Yeah, and it's a bigger market cap than Bitcoin even now. So the entire like the silver sell off equates to the greater than the market cap of Bitcoin. Um, and this is I mean, we're not going to go into like too much on the silver thing, but like in the way that it's had these historic run ups and collapses in the past, but it seems to be happening again with
yeah,
silver.
definitely.
Yeah.
So one interesting thing about this, Jim Bianco said that this is the fourth worst single drawdown day in 10 years for Bitcoin. And the other 3 days of such magnitude would be FTX failure, Terra Luna collapse, and the worst day of the COVID shutdown. So, all three of those days, something kind of was broken in the market. Somebody was blowing up.
Some
Is
kind of
that
a black
this?
swan.
Yeah. So and kind of like a specific event. Is that the case here? Probably. And so I'm obviously it'll come out over time, but what interesting to find out. One last little tidbit, little piece of information. So the spot Bitcoin, US spot Bitcoin ETFs, right? The average purchasing price for a BTC ETF is $90,000. So 41% underwater right now. And it needs, I guess, like a 50% rally to get to break even again. So will this spot Bitcoin ETF holders diamond hand it, or will they capitulate on the Friday opening, maybe next week? That could that could introduce a lot more selling pressure.
Yeah, and then there's the whole the DAT theme. MicroStrategy now officially underwater on its holdings. I believe its average purchase price is around 75K. So there's questions there. Will MicroStrategy and other DATs eventually have to like puke out their coins here, and thus making this thing spiral even further? Now I see a lot of people saying, okay, the actual bottom for Bitcoin is probably in a what 40-45 range. Oh, David, you're muted.
Sorry, we talk about this for the past like couple years, right? Like on the way up, the targets for the top keep getting pushed out, right? And then on the way down, you get the same thing. So like 2 weeks ago, people were talking about, oh, generational time to buy is 65, 60. And then I've just seen all this morning, all those people saying like, I said I'm definitely going to buy at 65 to 60, but now I think it's going to go to 50 or 45. So
Yeah,
it's the
and
classic
then
thing.
exactly, and then there's something you put in the doc here. Somehow somebody has a chart on all the Bitcoin analysts, and they're all officially bearish. And this is also something we've talked about a lot. Is on the way up, all the analysts keep um, revising their price targets to the upside, and then on the way down, they revise their price targets to the downside lower.
Yeah,
So
exactly. And then this is the last like anecdotal piece of thing that I noticed this morning. I was listening to another podcast, but you're starting to see this classic thing, which I hadn't thought about. Kind of harkens back to last cycle where um, people, as the prices get really low and everybody leaves and all that kind of stuff, the pitchforks come out, and you just see like these like vicious attacks on people who have made money or are deemed to be like bad actors. So you had like Dan Romero, right? He was vilified like a week and a half ago. I wrote about it in my newsletter, right? Like
this is the
scammer got a
Farcaster
hundred.
guy.
Yeah. Scammer got 180 million off of these people, and it was just turns out to be like just a lie, basically, right? He gave all the money back, and then CZ, he's on his villain arc again. I'm not saying that these people don't deserve any of this, but what I'm saying is pointing out a pattern. Is you see people start to turn on each other during these kind of like very bad sentiment times. So I expect more of this to happen. Maybe the main character himself, Michael Saylor, will to become like the punching bag for the next, I don't know, month, 2, 3, 6. So that wouldn't surprise me if we have more of this kind of everyone turning on each other and trying to feed off of the main characters of the cycle.
Yeah. Well, I don't know about you, David, um, or Aaron, if you want to chime in, but I I feel somehow relieved here, actually, now that Bitcoin is puking. It just seems like it was bound to happen, and like now that we're getting this like massive capitulation event. I feel a certain sense of relief somehow. I don't know. It's, psychologically, I feel like, okay, finally that thing is happening, and I don't know. Let's see what rises out of the ashes.
That probably means we have a lot more to go then, Graham.
Exactly.
I think there's some other things going on that are playing into this as well. I mean, there was supposed to be this Bitcoin strategic reserve. I think that there were a lot of people banking on some large things happening that don't seem to be happening. And so the U.S. isn't really going out and buying $1 trillion worth of Bitcoin. Apparently, the strategy now is to just use civil asset forfeiture and to continue to steal Bitcoin. And so that's a pretty big deal, right? So if you don't have the US government buying $1 trillion, that might change people's perspective a bit. And then there's all of this regulatory uncertainty as well with Genius and Clarity Act. So I think people were also anticipating maybe that 401ks and some of these other investment vehicles would soon be coming in and buying large quantities of it, and that seems to be tabled. So there's other uncertainty out there as well.
Yeah, exactly. A lot of the narratives that Bitcoin had going for it seems to have evaporated, and it's yeah, and there's just like so many different headwinds. Another one, of course, is the quantum threat. People think that that's I mean, people are pointing to that as a reason why they sold or are out.
Well, I think this Epstein information is factoring into it a little bit. I think that people are starting to question the digital gold narrative itself. And I think this has actually happened in two different ways. First, I think that narrative started to be questioned when gold shot up, when gold, went past 5,000, when silver went above 100, and people were looking at, okay, well, if Bitcoin is supposed to be this new store of value, how's it looking over the last 2, 3, 4 years relative to gold and silver? And the fact that it wasn't coming up as favorable as it had been previously has caused some people to doubt whether it really is as good a store of value as people originally thought. And then I think the Epstein thing does kind of bring back this whole, why is it now digital gold and not digital cash? Was there more to that story than people thought from 2017? I'm seeing that start to come about. I'm actually seeing it even on my feed where people are starting to ask questions that had previously been put to bed.
Yeah. Let's get into the Epstein thing. For people who aren't familiar, haven't been, I mean, there's been a lot of information dump over the last week with the Epstein files being released. It's just dominated the timeline. Aaron, you've been following it quite closely, I think, as it relates to Bitcoin. Maybe you could point out some of the what are some of the highlights there? Or like what does the Epstein email dump have to do with Bitcoin?
Yeah, so I've created a website and I've actually downloaded all of the Epstein files. I had them all up. I've created this site, Technocracy Atlas, where you can actually search all the documents. And I'm now in the process of downloading and uploading the remaining, I think I have 2.2 million documents. There's so much information. I actually think by the time people are done digesting this, it's going to change people's understanding of how the world works. This is not even just a Bitcoin thing. But the thing is, people weren't even talking about Epstein in the context of Bitcoin. That's not, if you would have asked people last week if that was even a top 10 thing, and it wasn't. But I actually wrote about it. I wrote an article a couple of years ago, and I said, and one of the things that I've been focusing on is warning people about technocracy and specifically CBDCs. And one of the things that I found before these emails came out is that Jeffrey Epstein had invested in this group, this MIT Digital Currency Initiative. And this group out of MIT actually implemented tested three CBDC pilots within the United States. And the most important one it's called Project Hamilton. And Project Hamilton is essentially the digital dollar. And so this is a project that MIT worked on with the Federal Reserve Bank of Boston. And they actually created a CBDC that can do 1.8 million transactions per second. So, compared to, Bitcoin at 7, whatever it happens to be. Well, I started digging into this. I'm like, wow. So Epstein put money into this project. We didn't know where it was earmarked. It could have gone to other projects within MIT. But it also turns out that during this time period, I think 2015, MIT took over the funding of Bitcoin core developers. So there was previously this group called the Bitcoin Foundation. It was a nonprofit that was funding Bitcoin development. It ran into some financial difficulties. And so all of a sudden, MIT was actually paying for 3 of the developers, Corey Fields, this guy Vladimir, Gavin Andreessen. And so I hypothesized in this article, I said I didn't know for sure, but I mean, it's conceivable that Jeffrey Epstein was responsible for kind of funding the shift from digital cash to digital gold, right? So SegWit, Lightning, the whole 9 yards. But it was just speculation at that point. Now we know from these files, it's much more than that. Turns out that Epstein invested in Blockstream in July of 2014. He invested $500,000. And when I say he invested, he didn't put his own name behind it. He invested through somebody else. He invested through this guy named Joy Ito, who also happens to be the guy running the MIT Multimedia Lab. So he invested in Blockstream, and then 8 months later, we know from the emails, his money was actually earmarked specifically for funding the Bitcoin core developers that, I would argue kind of cemented Bitcoin from being digital cash to digital gold by working on SegWit and Lightning and so forth. So that to me is a pretty big revelation. But the other revelation is one of those developers that he was funding then went on through the same MIT initiative to be a co-author of the Project Hamilton white paper. So in other words, he paid for developers to cement Bitcoin at 7 transactions per second, invested in Blockstream, which benefits from that, and then funded the development of a US retail CBDC that does 1.8 million transactions per second. I found that to be pretty interesting.
So would you say the through line or the end game there would be to try to kill Bitcoin as a medium of exchange or like as something useful, and replace it with like a government surveilled version of CBDC? That's the end game. Like that was the plan.
I think that's part of the plan. But then there's another interesting twist to the story, because I started using Bitcoin in 2012, and I used it as a medium of exchange. And then, I stopped using it as a medium of exchange in Q4 of 2017 when the fees went to $50 and it was taking like $7 days to finalize a transaction. Well, if you're going to shift the narrative and you're going to say, well, it's no longer used for digital cash, it's going to be a store of value. In order to be a store of value, it needs to either maintain or go up in price. Well, it turns out that a University of Texas study analysis shows that up to 50% of the price appreciation in Bitcoin came from Tether. And that Tether was found to not be backed one-to-one. In other words, they were printing money out of thin air. They were printing Tether out of thin air and using it to pump Bitcoin to basically create the store of value narrative. And it turns out that there's a common person involved in all of this, which is Brock Pierce. And Brock Pierce was, this is kind of really overwhelming amount of information on this, but he turned out to be Epstein's advisor on crypto all the way going back to 2011. And in fact, he invested $3 million for Epstein in Coinbase in 2014. And he was he was a co-founder of Tether. So, I think there's some interesting overlap. And in fact, I can't prove this yet, but it wouldn't surprise me to find out that Epstein was in Tether through Brock Pierce as well. So the same people that are cementing I call it hobbling, but however you want to view it, of Bitcoin, also funded the CBDC project, and then also funded or were behind Tether, which was printing stable coins out of thin air to pump the price of Bitcoin to reinforce the store value narrative.
Okay. I'm just trying to understand like what the point of that is. Like you would want why would you, it's not to kill Bitcoin, it's to make it go up in price so that it fulfills this store of value narrative. And then to what end?
Well, to keep people on that track so that you kind of cement, so that you don't in any way go back to Bitcoin being digital cash. You're kind of, eliminating the competition in a way. But remember, Epstein also invested in Blockstream. So there's a financial interest in monetizing Blockstream transactions, and Blockstream benefits by there being a slower, expensive base layer. So there's a profit motive in there as well.
All of that, those seems that you could draw conclusions that seem nefarious, but isn't it true though that he just casts such a wide net across so many different parts of technology, that you could just say he was just he had his hands in everything.
Well, I mean, that's all.
Versus,
Well, I guess we'll have to see what his entire crypto portfolio is. But I will say that prior to when I was talking about this a couple of years ago, people's viewpoint was, well, that's a conspiracy theory. Epstein didn't have any involvement in crypto at all. And now we find out he was an early investor in Coinbase, and he's funding nonprofit activity out of MIT. There are other parts of the story that are in the theory range, because Epstein wasn't even investing his own money. But I don't necessarily want to go into that yet. I kind of want to solidify the facts. But let me just say there may very well be a motive, and that motive may be tied to whose money he was investing in all of these projects, because it wasn't his own.
yeah, I don't shy away from conspiracy theories. I mean, Graham and I talk about them often, but it just in this, it just seems like a competing theory would just be that he was in everything that was reasonably, I don't know, good or performing well in crypto in that those early stages, like he was in other areas of technology, right? Like he just those emails reveal that he had contacts or was conversing with pretty much anyone who was looking for money or was in technology. I mean, not just crypto, right? Silicon Valley and all that. So, um, yeah, it just seems like just he was everywhere, or connected, at least had an introduction to everybody.
Well, but I think the celebratory tone of winning and being able to take over the funding of the Bitcoin developers, that seems a little interesting. Why would you be celebrating that, particularly given that it's a nonprofit? That's not even a for-profit venture. Why would you be doing that? Why would you just donate money and then specifically be celebrating that you get to be the one funding open source development instead of a bunch of other people that were competing for open source development? Clearly there's intent, right? There's motive there, because they had a specific reason they wanted to be the one funding these open source developers. And that implies that there's an agenda behind it. And if you follow the rest of the money, like for instance, the investment in Blockstream, it seems pretty clear that they were very interested in solidifying the Bitcoin as digital gold instead of digital cash narrative explicitly, and we're profiting off of that.
Is it mainly a profit driven that they would want to do that, or is there something else?
Well, there may be something else, but that's the part that I don't want to necessarily discuss yet, because I want to do more research. So when I talk about this, I mean, I can say definitively, I know he invested in this state. These people were involved over here. And so there's some other stuff that I have some suspicions on, but I actually don't want to talk about it until I can either confirm or deny it. But I do have an idea formulating around that might benefit his investors. The people that are actually putting up the money might benefit from there being a CBDC. They would be the beneficiaries of that as well.
I've heard these. I've heard these points spoken about on crypto Twitter for the past week or so. Have any of the other parties, like Adam Back, have they responded to any of these suggestions or allegations? Because I haven't seen that.
Well, it's tough for me because I wrote a very short review about this book, Hijacking Bitcoin, and was immediately blocked by Adam Back, Michael Saylor, Max Kaiser, the other core developers. So I don't actually. I mean, I can proactively go and see, but it looks like there are even Bitcoin maxis that are now going after Adam Back, because it seems like Adam Back maybe had a tighter relationship with Epstein than people had ever imagined. In fact, previously, Back had denied any Epstein involvement in Blockstream at all. And I think one of the things that's interesting about this, when you follow the trend on this, is that, well, you could say Epstein's not an investor just because his name's not in the cap table. But but we now know from the emails he invested from this specific venture fund that Joy Ito ran. So Adam Back previously could go out and say, yeah, Epstein's not an investor because on paper it's Joy Ito. But now we have the paper trail that shows that in fact it's Epstein's money through Ito that is the investment in Blockstream. So the parts of it that I've seen, which is not Back's kind of official response, are a lot of Bitcoin maxis now trying to call him a suit and kind of trying to vilify him now, which I think is very interesting because this is kind of a new development, and there's obviously somewhat of maybe a new renewed civil war even within the Bitcoin maxi community.
All right, so let's let me invite a little conspiracy thinking into this. So obviously Epstein represents something else, right? He's not doing this kind of on his own. This would be like what, the deep state, CIA, Mossad, something like that. What is their interest in this?
So the wild part about this is why I'm still trying to wrap my head around this, because this is not even usually a place that I go, but it turns out he was managing money for the Rothschild family. And usually when you say that, it's just kind of like, I never go.
Oh yeah, here we go.
I never go there. That's something that I've never talked about, because it's one of those things you're automatically labeled. But the documents show two things. One, there's the back and forth emails with the Rothschild where there's a $25 million fee agreement. And then there's actually an email where Epstein is talking to Peter Thiel, and he says, as you know, I manage money on behalf of the Rothschild for making tech investments. So this is why I said, so part of what the motivations are behind this is that, Epstein is the front for a lot of various people and a lot of various investors. And so trying to figure out who that is will probably inform a lot more about what the motives are. That's why I didn't want to necessarily break that up, because then that even comes into, to the Rothschilds, how much are they even involved in central banking and all that other stuff. That's why I didn't want to go there. But it now is interesting, and it needs to be explored, because we do know that he was managing their money on tech-related projects.
In my head, when I hear all this, I think, okay, like what's the end game, right? Okay, fine, you pump the Bitcoin as a store of value narrative. The price of Bitcoin goes up a lot. Great. But what you maybe, like, if you're, the lizard people at the top or whatever, your goal is actually to kill this thing that really is threatening your the dollar, or like the traditional financial system, right? You don't like this emerging technology is dangerous. Let's like push it over into a corner where it's safe. It's just a store of value. Wall Street can like wrap its head around that. We're not going to use it for like as a replacement for actual commerce, medium of exchange. And on that front, our plan is to implement this like fully controlled CBDC that we can like turn people's access on and off to, or like that's how my head envisions this whole big picture.
Well, so the wild thing is that now they built this CBDC. I mean, it works. I've actually talked to a dev, and even the specs that they claim that they hit, they've gone beyond that. But then Trump comes in and says no CBDC. So now we have a backdoor CBDC through the Genius Act. And so let me explain that. It's not technically a CBDC in the sense that it's not the central bank issuing it, but people aren't really concerned about who's issuing it. What they're concerned about is its ability to be tracked, programmed, and censored. And it turns out that in the US, it's actually the US Congress that is the heavy hand with respect to financial surveillance. I wrote an article and I outlined 13 different ways money in the US is being surveilled, but you have the Bank Secrecy Act, which includes know your customer and anti-money laundering laws. You have suspicious activity reports. So any transaction more than $10,000, a report is automatically sent to Treasury. You have bulk data collection. All of this comes from Congress. not the central bank. So what they did when they passed this legislation is Congress made the Federal Reserve out to be the bad guy. And don't get me wrong, they are the bad guy. They're an unnecessary third party that profits off of the monetary system. So I'm not defending the Federal Reserve, but the Federal Reserve is not the entity proactively driving surveillance. That's Congress. And so now they've captured the stablecoin market. And in the last 12 months, there was $33 trillion worth of stablecoin transactions. They've taken all of that and they've put that under the control of Congress. So now all of the surveillance and bank secrecy stuff and Congress's tight leash now happens through the Genius Act. But this is where the conspiracy part of this gets more interesting and needs to be better documented. The biggest beneficiary of the Genius Act is Tether. And the biggest actually beneficiary within Tether is our U.S. Commerce Secretary, Howard Lutnick. His firm, Cantor Fitzgerald, has the exclusive contract to manage all of the treasuries that back Tether. So they make fees on all of the treasuries that back Tether. So what happened was, prior to the Genius Act, you could have a stable coin and it could be backed by, it didn't have to be backed by treasuries. It could be backed by gold, silver, whatever kind of asset, or as was demonstrated by the CFTC in the state of New York, or not backed at all, or only backed like 25% of the time, which is where Tether was. Now Tether is forced to be backed by treasuries, and Howard Lutnick benefits from that because it's his firm that is managing those treasuries. Well, it turns out that Brock Pierce is the co-founder of Tether, and I actually suspect that Epstein, again, is probably an investor, maybe through Brock, because when you see the documents, truly, I think they referred to Brock as like the elf something or other. He's referred to as basically his crypto advisor. So it may turn out in the end with all of this that they hobbled Bitcoin, and now we do have surveillance digital gold, and the beneficiaries do happen to turn out to be Brock Pierce, Howard Lutnick, and Epstein. So it's not a CBDC. We effectively get a CBDC, but they get to capture all the fees.
All right, let me push back on 2 points that Graham knows well. I've pushed on it. First of all, Bitcoin to me, that was the first thing I became interested in crypto. But like very quickly, you realize it's pretty terrible for a lot of uses because it's so transparent and there's a permanent record at all times. I don't really think any sophisticated a government actor would see this as a threat because you can just like perfectly trace it always infinitely forever. So I don't know. It doesn't seem like, even if it was used as a medium of exchange, I just don't see it really as a threat to the government. It always seemed like it would be useful for the government. So that's one thing. And then on the CBDC thing, the government already has, the U.S. government already has a CBDC. It's called the dollar, and it's perfectly trackable, and they have perfect control over it. So I've always disagreed. So for example, China or other non-U.S. currencies might need a CBDC to get that level of control, like granularity of control. But I feel like the U.S. has had a CBDC for a long, long time, and they still do.
Well, I've argued that as well, but it's not as granular. So a CBDC offers much more control and much more programmability. We have kind of weak programmability. So if you go back and think to what happened with COVID, and the government trying to enforce COVID policies, the government decided which businesses were essential, which businesses were non-essential. If you actually had more programmable money, you could just shut off money by business code, right? Like even the Canadian trucker situation could have been much more easily handled if you had a CBDC. In fact, the programmability part of this is something that the current dollar is pretty weak on. I mean, we do have it with respect to things like health savings accounts, or you could even argue food stamps. But for the most part, the dollar is not very programmable. And then when you start talking about the tokenization of all assets, because CBDCs or even government regulated stablecoins, that's just tokenized fiat. But what they're working on now, the overall kind of technocratic plan, is to be able to tokenize everything you own, not just money. Money only represents 5% of overall assets. It's your retirement account, financial instruments, commodities, gold, silver, so on and so forth. They want to tokenize that and have it so that you are settling transactions in a digital programmable currency, and the assets themselves are tokenized in that same way. And that is in essence what the Clarity Act is. So we're talking about a much more robust surveillance system. And this isn't a conspiracy theory. That's actually what the Clarity Act is.
They being the government or something else?
Well, the ultimate control is the government. The financial surveillance is always the government. So what we're doing is we're taking private entities and we're adding government surveillance to it. And the beauty of this is, if you tried to roll out a CBDC or you tried to do this as an official centralized government function, you would have resistance. What's problematic is this Genius Act has been able to pass. And in essence, what it's going to do is add CBDC level surveillance, but people don't understand the nuance. They don't understand the technology. So they were able to push it without any resistance whatsoever. And people are kind of using the patriotic bill names and so on and so forth. And they're selling surveillance as innovation. It's actually quite problematic. I mean, I've been trying to warn people about CBDCs. And when the election happened, because I had talked to Vivek Ramaswamy, and he actually pushed Trump to come out against CBDCs in my state of New Hampshire. And people are like, you must be relieved. And then it turns out to be this gigantic rug pull because we end up getting the surveillance and no one's even talking about it.
Okay, one more pushback. So on the tokenization of like specifically RWAs, real world assets and everything, isn't that stuff already heavily regulated and controlled? So the tokenization would just add, you think, just another deeper layer of what's it called? Visibility
of control program. Technocracy is it's a completely different model of governance. Most people are not even aware of what technocracy is, but technocracy is a movement that started in the 1930s, and the idea is that basically we're too stupid to make our own decisions, and that we need scientists and engineers to make those decisions for us. And the cornerstone of technocracy is to actually move away from a price-based system and move to an energy credit-based system. And that energy credit system or carbon credit system is basically the control system on top of which you have, essentially social credit scores that are determined from the top down. And to the extent this may sound like, well, that's a conspiracy that's out there. This is an actual full-fledged movement that you can document and track. Elon Musk's grandfather was the head of the Canadian technocracy party. Elon Musk has actually stated that he wants a technocracy on Mars. He's stated that money will be replaced with energy. He's talked about UBI. This is the direction that we're moving towards with UBI, AI surveillance, and everything else. And so the reason that Genius and Clarity are so important from my perspective, from a freedom perspective, is that it does provide the framework for very granular control and the ability to track, program, and censor really with the click of a mouse button. You're right that the existing systems have those things already in place from a legal perspective, from a legal framework perspective. But the actual implementation of it is very clunky because the underlying databases and systems by which trade occurs don't have that kind of programmability or tracking built into it.
Okay, so okay, Graham, do you want to go?
I was gonna ask. I'd love to hear like how bad it could get. What would be like this dystopian end case here? Like, let's say all financial assets are programmable. It just means the government. What can the government do? Like, what kind of powers would they have in this situation? What would the effect be?
So one easy way to look at it, it's the first chapter of my book, The Final Countdown. I kind of paint a science fiction version of it, but it's based on actual programs that exist in the world today. And one way you could look at it is you could look at the UN and their 17 Sustainable Development Goals. And if you look at this, they actually want to regulate everything, the land, the air, the sea, everything in between, where you work. This is 15-minute cities, all of that. What you have to...
I hate that. Yeah.
what you have to
15-minute
understand,
cities.
what you have to understand is that this is a global movement. So the WEF and all of these organizations, this is the movement that they're pushing us towards. This is what the World Health Organization, there are a lot of global standards that have already been set and legal frameworks that have been set pushing us in this direction. So so when Klaus Schwab says something like you'll own nothing and be happy, this is the way that it's done. It's done through the tokenization of all of your assets, where you essentially really don't own things. You just have a kind of a right to use assets, provided that you are complying with the rule set that is determined from the top down. That is literally the end game on this. And the UN and those organizations, I mean, it's UN Agenda 2030. So there's an actual timetable for this. So to the extent this sounds like it's out there, it's really not. If you look at, for instance, digital IDs, by 2027, over half of the planet will have digital IDs. In Mexico, they're rolling out this year mandatory digital IDs with QR codes. At the end of last year, 17 countries signed kind of laws at the same time that were written by the same people to implement digital IDs with the same set of technology vendors. The United States has a digital ID. This is one of the things that has been hard for me to communicate to people. What I've been arguing is that in the United States, technocracy has accelerated 5 years in this first administration. We had something here called Real ID, which was something that was added to a bill, an emergency bill in 2005. And for 20 years, it wasn't implemented. The states pushed back. You had all these attorney generals fighting and so forth. At first 120 days of Trump's administration, they've actually rolled it out. And so Real ID is attached to much more information than like a standard driver's license. And now they're plugging it into other databases, and Palantir and others are involved. It's already digital in 12 states. The plan in the US is for it to be digital in all 50 states by 2027. And even now, as of 4 days ago, if you fly anywhere in the United States, if you don't have a Real ID, you have to pay $45 each leg of a flight. So that's just the digital ID component. CBDCs there are 134 countries representing 98% of the GDP of the planet at various stages of CBDC research and deployment. Over half are actually now already out of the research phase. And this Genius Act has actually kind of accelerated everyone's plans. And AI surveillance is certainly ramping up everywhere. So when you actually look at what's going on and how digital IDs and CBDCs are being rolled out, tested, and integrated, technocracy is not a conspiracy theory. It's an active plan that has a 2030 kind of go date. So this is why this is troubling to me. Genius and Clarity are probably the biggest threats in the United States to human freedom, because it's going to basically strip people of the ownership of all of their assets, not just money.
What would the world look like if they're successful in as you're saying, like basically having full control over everyone's assets? Like yeah, I mean, is it you just live in a pod and eat the cockroaches or whatever?
I mean, I guess it depends on who's rolling it out, but usually this kind of authoritarianism doesn't go well. The Soviet Union certainly tried this. I mean, this is just kind of like communism with technology in a way, but the Soviet Union has tried this. China had their great leap forward. Usually what happens is tens of millions of people die, and then it turns out that the people that were trying to centrally plan things didn't really know what they were doing. But if you want to know the way that they portray it, even Elon Musk talks about the way that they try to position it is work will be optional. You won't have to work. You'll have universal high income. Musk has gone so far as to say, we won't have prisons anymore. If you can commit a crime, you'll just have a robot tailing you, basically, to make sure that you're keeping your actions in line. I suspect that's probably not the way it would work in reality. But I find even their presentation of a 15-minute city to be a bit demoralizing. I mean, when you're told what kind of education that you can have, I guess you could look at China as a test case for this. China already has some form of CBDC rolled out. They certainly have a lot of AI surveillance. They have social credit scores. that are not nationwide, but that are more kind of at the town level. So you could kind of start to look at what's going on in China. And already today in China, there's a tiered system of living based on your social credit score. There's some interesting documentaries you can find about this on YouTube. And they showed one example of, a journalist. The social credit system, you can kind of imagine how it works in an authoritarian system. You're penalized the most for speaking out against the government or any perceived, from their perspective, financial crimes against the state, right? So if you're not paying your appropriate level of taxation, you literally get into tiers based on the social credit system. And if you're at a lower tier, that actually determines the kind of internet access you have. It determines what kind of housing options you have, your educational options, your healthcare options, travel, the whole 9 yards. So this already exists. There are already something like 33 million people in China that are at the low level of the social credit system. And so what that means is essentially, in this scenario, you really don't have free speech, and you have kind of a caste system that is structured based on your compliance with government mandates. So I'm giving you, that's kind of the practical. I mean, it could get worse than this, right? I mean, it could be do you even make it? The first chapter of my book gives kind of a pretty dystopian view of it. I mean, I tie in the Canadian MAID program, which is medical assistance in dying euthanasia program. And like, if your social credit score drops too low, then you get basically suicided by the government. I mean, it could get to that level. But the problem is, whether people have good intent or not, central planners, even the idea, to me, I view this as a battle for free will. If what choices you have in your life, what decisions that you make in any aspect of your life are determined from the top down by authoritarians, then you've essentially lost your fundamental free will. And so to me, this is a horrible situation. I don't think you want a deterministic outcome set by other people. I think that goes against our fundamental freedom as human beings.
Do you think Bitcoin could be an antidote to this to some extent? I mean, at least, okay, it's very, can be tracked quite easily, but at least you own it if you have it in self-custody. So it's a form of value that could save you to some extent.
So my view is on this, that the only antidote to this technocracy, which is growing rapidly, is privacy. And so to that extent, Bitcoin needs to be kind of modified to be useful as a tool to help you with your freedom and to help promote privacy, because it's not private by default. It can be made private if you use something like confidential layer, which is something that I recommend. And I don't know if you guys have talked about this on here or not, but an ability to kind of, you can tokenize your Bitcoin and you can make it private using the Xano blockchain. So you can make your Bitcoin private and spendable. So to me, that's something that I would recommend that people do if you want to stick with Bitcoin and you're concerned about privacy. But privacy is critical. I think privacy is the only way out of these centralized systems, and we need a sufficient number of people to move towards private systems in order to be able to fight back, because technocracy itself is kind of an all or nothing. They want no one left behind. So we kind of need to resist this by developing parallel economies and moving into solutions where we're using private currency and tokenizing and trading our own assets privately. And Bitcoin can be a part of that, but I think that there are some other blockchains, things like Xano and Freedom Dollar, I think is a good counter to stable coins and CBDCs. Freedom Dollar is a privacy stable coin that's not backed by US Treasuries. It's what's called an algorithmic stable coin. It's actually backed by Xano, and it's private. It can't be tracked, can't be frozen. And it's not going to fund, the $3 trillion of added spending that is going to happen with the government regulated stablecoins in the U.S.
A comment from Rumble asks, "What are your thoughts on zero knowledge proofs? Are you in favor of them? Do you think this is like a technology that helps fight against technocracy?"
Yeah, I think it's an interesting technology, and I'm for experimentation. I'm not a maximalist of any kind. I'm pro privacy as a way to counter technocracy, but I think zero knowledge proofs are also an interesting technology. And I think that in one of the things I like about the privacy space is that there's really a lot of innovation. It's kind of a constant arms race to stay on top of, they're trying to surveil you. Are you staying on top of making it so that your blockchain is difficult to surveil? And so I'm in favor of experimentation across the board.
So
Wait, hold on, Graham. Hold on.
yeah,
So on privacy, Graham will know this very well, but I am skeptical that if uh, if what you say is true about governments wanting to kind of maybe increase their power through technocracy and all this kind of stuff, why in God's name would they ever allow privacy coins to flourish? Because at the end of the day, the coins have to be tied to the real world system, and governments. I just don't see a government ceding power to that kind of technology.
Well, to me, it's a race. So again, this is a competitive dynamic, but I view the world as, we're moving towards this technocratic system. So if we want to preserve our free will, we actually need to build and scale these things out, and to get people working in parallel economies not attached to the existing system. I mean, there's a gradient of that, right? Like, so I haven't had a personal bank account since 2019, and I predominantly use, privacy coins right now, and increasingly things like Freedom Dollar, and I use this thing called a ZBIC Mastercard, where I can load my. So that's an interim step, right? That's not completely disconnected from the system, but it's a way to move towards completely being peer to peer, but where you are still able to have your privacy as you're building out these parallel solutions. But ultimately, we need peer to peer solutions. We need people trading outside of the system, and it is
But why would
possible.
but why would governments allow, like, even from a taxation perspective? It just seems like if this ever got to any kind of reasonable amount, like one, two, five, 10,000 people doing it, maybe. But beyond that, I feel like governments would just look in and smack it down, especially when it comes to taxes and stuff.
Well, I'm not advocating that people don't pay taxes, so I certainly don't want to make any statements like that. But like I said, it's something that needs to scale quickly. They're not going to want it, but what we have to understand is that what we're battling here is a complete digital prison. So governments don't react quickly. And frankly, I think one of the things about privacy coins is that having something that is outside, how would they know, right? I mean, to what extent, since it's private, it's hard for them to even know how much activity is going on. For instance, I launched a preliminary. It's a global medical tourism marketplace, because in the United States, our healthcare system is a disaster. We have the highest healthcare costs in the world. We have really bad outcomes. Every minute in the U.S., somebody files for bankruptcy due to medical costs. So there's this $100 billion marketplace for medical tourism. And this isn't just cosmetic procedures. This is complex heart bypass surgery. This is cancer treatment. In fact, there are better treatments through medical tourism than you can even get because of government regulation within the United States. This is a marketplace where the use of privacy coins and privacy stable coins would be a great way to start introducing this. But from the standpoint of government cracking down, well, I mean, if you have diverse people all over the place, all over the country, and all over the world engaging in peer-to-peer transactions, it's not like this is one local nexus where you can kind of look in at it and say, oh, this physical community is doing this and we can excise this. This is just a bunch of individual people engaging in voluntary transactions that are hard to even detect. That's a way that you could start infusing privacy coins into the marketplace and start to gain mass adoption without too much surveillance happening, or too much interest even being drummed up.
Another person in our comments asked basically, what do you think are Bitcoin's chances of kind of adopting to this technocratic push? Do you favor Bitcoin's chances for kind of modifying or improving in this respect, or is it kind of unlikely?
It doesn't look likely right now. I mean, something substantial would have to change. I actually argue, I kind of put, I call the hijacking in a way is kind of technocratic in nature. I mean, you had a small group of people that decided we're going to artificially limit the size of the blocks and put in essentially a cap and trade system. That's effectively what happened. Replaced by fee, reduce small blocks, cap and trade. It's very similar to how an energy credit system would work. It's actually somewhat technocratic in nature, but it could change, right? I mean, nothing's impossible. The problem is right now, it seems like the debate within the community is we're going to make it more technocratic or than it is now. Like, I don't see movement going in the other direction. And I often play this clip of a 3-minute and 18-second clip where it's, Roger Ver talking about Bitcoin from 2012, 2013, and then, Michael Saylor talking about it. And to the extent Michael Saylor is if he is the standard bearer, I know it's an open source protocol, but he certainly gets a significant amount of attention. I mean, he's on the video saying, we don't want Bitcoin to compete with the dollar or the euro or MasterCard or Visa. You should comply with KYC. You should pay your taxes. If this is the rallying cry that's getting people into Bitcoin, then I don't think people are getting into Bitcoin because they expect it to be a freedom solution. That's the part that I don't understand. Do people? I'm gathering that people aren't even looking at it anymore as a freedom solution. I think they're more looking at it as a number go up store of value.
Yeah. Definitely not.
Definitely most people consider Bitcoin as an investment. But I just wonder, like, okay, for sure, people, that's how they look at it. But if you put money into Bitcoin, isn't it also kind of, even though, yeah, it's an investment, aren't you also kind of saying, like, I'm putting money into this thing that's not the government, not controlled by the government? At least I have the keys. They can't take it from me. Like, obviously, it's different if you're putting it into an ETF or some kind of investment fund. If you actually hold your keys. So yeah, it's not private, it's not perfect, but is there a case to be made that it's like better than nothing?
I wish there was. And I think early on when the expectation was that it was going to be doing a lot of transactions at scale. And this is, by the way, before we really had a sense of what was going to be able to go on with AI and the ability to track the blockchain. I think most people thought it was fairly anonymous, not completely anonymous, but pseudonymous, and that actually meant something. Because if you were doing 25,000 transactions per second, it would be pretty hard to figure out what's going on. I think that was the initial thing. The problem is that by keeping the blocks small, other things have happened. You now have these companies like Chainalysis, which started in 2014, that have been working with law enforcement for literally 12 years, and now crypto exchanges. And what they've done is they've done a great job of mapping out people's transactions. Last year, I had 3 different people come to me with legal disputes. A couple were divorces, another was a business partner dispute. And the counterparty, the person that they were up against, had literally hired a private investigator that was trained in Chainalysis. So now they can get one of your transactions and they can map everything back. So in these 3 cases, the other side was able to get more information about their transactions on Bitcoin than from the bank, because the bank only retains records for 7 years. And so the problem that I have is that people say, well, not my keys, not my coins, but they can't force me to give up my keys. Well, the problem is that the United States government has 325,000 Bitcoin. How do you think they got the Bitcoin? They didn't mine the Bitcoin. They didn't buy the Bitcoin on the open market. They actually, they stole it using civil asset forfeiture. Because they can track your Bitcoin, that what happens is they'll come to you and they'll say, yeah, you don't have to turn over your keys. Here are your options. We know it's you. You can either go to prison for the rest of your life, or you can turn over your keys. And so far, overwhelmingly, people turn over their keys, which is why governments are increasingly increasing their stockpiles. So I don't think it's that big of a defense. This is why I say if you are going to have Bitcoin, you need to be looking at privacy solutions. You need to look at something like confidential layer and take that seriously, because the Clarity Act is going to add more surveillance. This is the thing that people aren't paying attention to it. I have another article coming out. It's really long, but it's the definitive work on the Genius Act, the Clarity Act, and the entire history of financial surveillance. So it's kind of a broad work. And but what's being contemplated there is real-time transaction history. Real-time transaction and transactions being recorded. They'll hold on to your transactions for 5 years. They have to retain the ability to track your entire transaction history. And they share that information with the Department of Justice, the Treasury Department, multiple federal departments, as well as foreign central banks. So when people are talking about clarity and rules of the road, we're talking about a really heightened sense of financial surveillance coming out of this. So I don't know if the clarity that you have is that, hey, it's really clear that you're in a digital prison. I'm not sure that that's really a good deal for everyone. And that's essentially what we're looking at. And so what people don't realize is, yes, you can have your keys in your own self-custody, but the number of people that actually have Bitcoin that can't be tracked at all is actually a pretty small number right now. And people don't realize that you can even have Bitcoin that you didn't get through an exchange. But if you did a trade with somebody that maybe was part of an operation where the government cracked down, part of those government actions include forcing the person to try to turn over information about the counterparties, which then Chainalysis is taking all of that information and putting it into a database. So is it better than nothing? It's probably better than nothing, but it's not as good as people think. And the tracking is only getting better over time. So I think people need to seek privacy, either alternatives altogether or ways to make Bitcoin more private. And that's, I think, a wise thing for people to start looking at right now.
Yeah. Also on this point, Graham, I listened to a talk with Balaji last year, and he spoke about the comparison of like gold and how the government seized gold, and how many Bitcoiners then say, well, you can't do that with Bitcoin, right? Because you'd have to physically go one by one. And Balaji's point was with the accelerated development of drones and their ability, that soon that kind of physical disintermediation won't be really an issue, right? Like a government can, in a very granular level in the physical world, go out and coerce seizure of digital assets because they'll have like that level of drone infrastructure and stuff like that. And so he was saying, again, privacy is important because this historic reason wouldn't stand up now, whether it's gold or Bitcoin or anything really.
No, and further to that, I actually put out a post yesterday where I analyzed the BlackRock Bitcoin ETF, and I looked at the risk factors. People need to look at this. I mean, they actually have in there that the Bitcoin might be confiscated. And what people don't realize is that when gold was confiscated in the 1930s by FDR, if you had your gold in a vault or a safety deposit box, that was actually just physically taken. About 25% of the gold supply remained in the hands of the individual, even though they were legally obligated to turn it in. 25% said no and just held on to it. But when you look at these ETFs, or if they decided they wanted to confiscate it, if you've got it on an exchange or you've got it in an ETF, it's much easier to confiscate that than gold. I always say this, wherever I am, it's critical that people have their crypto in their own self-custody wallet. Like there's no reason to keep your crypto on an exchange for any of a number of reasons. Historically, exchanges fail. I mean, they can be hacked. There's all of the tracking and everything else. And so you want to maintain self-custody under all circumstances. I recommend people retaining their own coins.
Okay. Yeah, I'm just imagining this scenario with the drones showing up at everyone's house who the Chainalysis has determined there's a chance you have Bitcoin. This army of millions of drones just shows up and I don't know, sticks a needle into your brain and takes your coins. I don't.
No, they
It's
wouldn't have to
dark.
do anything like that. They wouldn't have to do anything like that. They just point the drone gun at your children and say, "Well, come on, let's give me your digital assets."
But this is the
Um,
thing. This is the thing you have to understand with clarity. So Bitcoin aside, the tokenization of real world assets is going to give them the ability to freeze not only your money, but to freeze everything. So all of a sudden, your social credit score drops, or you do something that the regime doesn't like, and now you can't move your investment vehicles. Now you can't start your car. I mean, we actually in the U.S. we just tried to pass a bill to get rid of a kill switch that failed. So they're going to be able to actually shut off more than just your money. This is why stopping this now, to me, this is the critical thing. This is kind of the battleground, and people aren't even aware that it's going on. If this were before the election in 2024, at least in the United States, people were looking at Klaus Schwab and Bill Gates and all of this other stuff, the same agenda, right? Same technocratic agenda. And they were very opposed to it. I mean, I had people lining up. I was doing workshops all over the United States where the first half was about technocracy. And then the back half was actually onboarding people to crypto and gold and silver and teaching them how to start working in the parallel economy. Since the election, people think they have nothing to worry about. But what's actually happened is the surveillance has ramped up, not only with, Real ID, but what Doge did was they connected Palantir to all of the federal government databases, and then that's going to be tied to your Real ID. So it may sound like something that's either far-fetched or off in the future. It's not. It's actually being implemented, and it's being implemented by companies that are competent. It's not being built by government. It's being built by private technocratic firms, and so it is a real risk. And I know for most people, it's so far outside of their thinking of how the world actually works that it's, explaining it without, looking like you need a tinfoil hat is a bit tricky. So, but it is that important.
So if I take everything you say at face value, and I take a lot of, and I do agree with a lot of it, and are you optimistic about the future? Because it sounds like you would just be incredibly pessimistic about where we're heading, and realistically, right? Because I personally think eventually the clarity or something like it will get passed. I think it's kind of inevitable, and I don't see privacy coins evading government in the way that I think you would like them to. So it seems to me like you would be very, very pessimistic about the future.
Well, I think that it's possible, and I think that we have to try to make it happen. This is why what I focus on is building these parallel solutions. And so whether it's, medical tourism marketplaces or privacy coins, and hopefully people start doing this for food and other areas. Hopefully people start building marketplaces for other categories. I'm not saying that the odds here are great. I actually created a site called ownnothing.org. And if you go to it, it actually gives you a bunch of assessments. And what I found is that we already own nothing. So for instance, we sign these click wrap agreements for almost everything, whether it's a software license, iTunes, whatever it happens to be. And I did some research on this. And at this point, I'm up to the average person signs 200 of these a year, and no one reads them. And if you did, you'd find out that, they're like 50 pages long, right? And you give up everything. You give up your privacy, you give up your information. In some cases, you give up your economic interest. I'll give you an extreme example. There was a doctor who died from food poisoning at a restaurant on a Disney property. And Disney tried to use the doctor's online service agreement for Disney Plus, which his kids were using to watch Mickey Mouse. And they tried to actually get out of the liability because of that agreement. Well, these agreements extend to not just software, your car. I mean, we rent our music now through Spotify. We don't even actually own our 401ks or investment assets when you dig into what the contracts are. And so part of what I've been trying to say and show people through this Own Nothing site is that you actually already own nothing. And part of saying that is that we have nothing left to lose. We're already at the point where we're 90% of the way gone. We need to build these parallel systems. I do think it's possible to build these parallel systems, and I think that we should do everything that we can as quickly as possible to get people on board. I'm not saying that this is an easy thing to do, but I think it's a necessary thing to try to do. Certainly they're going to continue to try to push these things. And I don't know at what point, maybe this Epstein thing, I will tell you the Epstein thing, 3.5 million pages. And when you read it, it will change your perspective on how the world operates, how money works, how influence works, and how government works at a fundamental level. This is not about sex trafficking. This is a completely different thing. And it's all there in black and white. People have never had this amount of access to be able to see what's actually going on behind the scenes. My hope is, and it's tough because it's tough to get people engaged, that this shocks people and makes people aware that they've essentially been pawns in a game that they didn't even know they were playing. And if that does happen, and enough people do that, I think it is possible to build these parallel systems. But the thing is, the way technology works and even ideas work, a lot of times people are like, well, they expect it to go mainstream right away. Nothing goes mainstream right away. There's an adoption curve. You're going to have your 2 or 3% of innovators, and then it's going to go to your early adopters, and then your late adopters, and so forth. And so we're at the point right now where we need to get the innovators building the parallel solutions that are as easy to use as the technocratic systems that are going to be put in place on the other side. Where we've struggled, and this is what I've found is kind of the tricky part, is when you have a freedom technology, people tend to have systems and ways to come in and infiltrate and hijack that in a variety of ways. I think that we've seen that with Bitcoin. So the question is, can you build these parallels without them being hijacked? That's where we're stuck. Think about this. When I first used Bitcoin in 2012, it was like this magical experience, because I've started companies. I've been a serial entrepreneur since the mid 90s. And every company I've had has had friction where one of the pain points of the business was always banking or payments or credit cards or whatever it was. And I remember I was just in awe of the ability to receive a payment just standing in front of somebody, wallet to wallet, with no bank and no third party. And at that time, it was better, faster, and cheaper than traditional finance. So at that moment in time, Bitcoin had a true lead. It wasn't just an ideological lead of this is money that's separate from state. It was actually a better, faster, easier to use product. And so we had that. And then if you look at what's happened for a whole host of reasons, from that time forward, we ended up with Venmo and Zelle and Google Pay and Apple Pay. So we lost the advantage of actually having a better product. And then we had the hijacking, and then you have the government interference and so on and so forth. But there was that point, at least that point for me in 2012, where, yeah, this was something that could provide economic freedom for the entire world. And so we could get that back. We just have to next time do it in a way where we're protective of and cognizant of the fact that there are people that are going to try to hijack it, and that is kind of something that's normally happens.
All right. I think let's wrap it up there for today, guys.
Yeah, I like that hopeful tone.
Yeah. Anything maybe Aaron, as a last question, like how would you recommend people move forward? For example, let's say you've got some Bitcoin. Is your best bet to just wrap it on Zano? Then at least you've got a private version of Bitcoin, or what would you suggest people do?
Yeah, I mean, first step is make sure you have it in self-custody in your own wallet. If you're not already there, that is number one, the first step. And by the way, I didn't chime in on this when you were talking about the price at the beginning, and I don't know if this is true, and I don't want to get a cease and desist letter, but I'm hearing these things about Binance having some issues and everything else. When there are these big drops like this, it stresses the whole system, and then it creates this whole cascade. So the number one thing is get your coins off the exchange in your wallet. And then, the number two thing I would say is wrap it and experiment with making your Bitcoin private. But the thing is, what we need to do is we need to get you guys know this more than I do, but I can tell you that the experience that I have talking to people that are new to Bitcoin is they don't even know its potential as a currency. I've done workshops where I've asked people if they've ever used Bitcoin to do a transaction, and they didn't even know it was possible. They've only known it as a speculative investment. So we need to do something to bring back the idea that, hey, Bitcoin is, can be spendable money, and that there's $1 trillion plus market cap here. of potential purchasing power that you can make private and spendable by wrapping it, with into Zato. And that's actually a pretty powerful idea, right? That gives real economic power to the ability for people to begin doing private transactions. And so I encourage people to try it and to check it out.
All right. Okay, I think that's a good place to end it. Thank you so much for your insights today, Aaron. And as usual, David, thanks everyone for listening. Have a great week.
Thank you.